Hello everyone, how's it going? So basically I wanted to go ahead and make this video to explain life insurance as simply as I can and share some of the knowledge I've learned this past year as being an insurance agent. Before a year ago, all I knew about insurance is that if you go to the hospital without it, you'll probably end up homeless because of all the medical bills. And life insurance, you die, you leave behind money. Simple, right? Well, not really. Now, that's still mostly true, especially the medical insurance part of it. Those bills are crazy. But life insurance, there's a bunch of different insurances for a bunch of different stuff, depending on what you are looking for. So if you're thinking about getting a life insurance, but you don't know which one to pick, that's already a good start. A lot of people don't even think about it until it's too late. So one of the first questions you have to ask, besides what kind do I get, is what do you want it for? So for the sake of this video and the sake of these two types of life insurance, I'm going to break it down between term and whole life. So I'm going to go ahead and start explaining term. So first of all, term insurance. Short-term insurance, basically. And they usually come in a set number of years, 5, 10, 15, 20, 25. I like to go by fives. So that's basically a pretty inexpensive life insurance, but it'll give you a high amount of coverage if something were to happen to you. For example, you can get $250,000 for $22 a month for 15 years. Term insurance is usually good if you are thinking about buying a house, a car, you are a business owner, or you're thinking about getting a life insurance for your kid and you need to up your own life insurance. So term insurance, you get a lot of coverage, it's really cheap, so what's the bad side? The bad side is short term. So if you get that $250,000 for $22 a month for 15 years, if it goes past the 15 years, you lose all of that coverage and you don't get paid back anything. The good news is that some companies let you switch your short-term insurance into a long-term insurance, which I'm about to go into. Long-term life insurance, whole life, universal life, all basically the same thing, will last you your entire life or until you turn 121 years old. But anyway, it's life insurance that lasts your whole life, so you will have coverage without having to worry about it running out. And most of them, well, I don't know about most, but some of them even have built-in retirement options. So let's say you don't get sick, you don't die, nothing happens to you, and you can set a date or an age where, you know what, I don't want to be paying into my life insurance anymore, I want my life insurance to be paying me, and you can set up a kind of retirement account. But I'm not going to get into that this video. If you guys are interested in that, I can go ahead and make another video on that on one of the companies that I work with, but that's for another time. So those are the good things about whole life insurance. The bad thing about whole life insurance is that they are generally more expensive, especially if you're a little bit older. Me, for example, I am 26. I pay $100 a month for my life insurance, which is a whole life insurance, and it gives me about $220,000 in coverage. For someone, let's say, is 35, to get about the same amount of coverage, they might have to pay $200 or $150, and if they are older than that, then they'll have to pay more. So those are the two basic kinds of life insurance. You just have to decide what you want it for. Do you want something that's short term, really high coverage, or you just want something that has coverage and will last your whole life? It's really up to you, or you can do what I did, and I have both. I have a long-term insurance to build up my retirement because I am self-employed and I don't have any kind of retirement plan, and then I also have a short-term insurance for in case I get sick or anything, because they both have built-in riders. I won't get into riders now, but they are just if you get sick, if you become incapacitated, you get some kind of illness, it'll be the same as if you died, and they will pay you out. So I have two instead of one, so I can use my short-term one instead of my long-term one, so I can keep my retirement. So that's basically all I have for you today. If you have any questions, go ahead and leave a comment down below. I'll go ahead and try to answer it, or I'll make another video going more into depth to this. So thank you guys for watching, and I'll see you next time.